I've seen this movie before. Here's what happened. We're talking about the Nifty 50 in the 1970s, and then we moved all the way, to the tech giants in the late 1990s when we have the dot-com. And then we have seen something about the FANG, F-A-A-N-G, in the 2010s. And now we're talking about Magnificent Seven. So the concentration is not something new. It's a matter of what they are presenting. Now, this thing about the cycle itself and what we have seen in the fantastic seven here is basically what they're offering. I mean, in few words, they're dominating certain areas, which is touching every level of the economy, which is AI, the cloud computing, semiconductors, and also the consumer platform. This is why it's really significant.
And so with this in mind, and I'm glad you brought up FANG, because we had seen that hit so many different iterations. It was tough to keep track. We saw it go from FANG to FANG Man to Batman at one point as well. I mean, there's so many different iterations of these, but one thing that is really interesting that came to the top of my mind for this conversation, which is how are these companies at scale different than they were when we were talking about the Nifty 50s back in the day?
That's a good question. There are three things that distinguish the Magnificent Seven, with the exception of Tesla, because they're going through a tough time now. But they're still a solid company. Number one is they make money. They have a lot of profit. And we have seen the earning from Meta, $43 billion, and the same thing from Amazon, $143 billion, and $70 billion coming from Microsoft. And today we're going to hear from Apple. That's number one. They're making a lot of profit. Number two, they have cash. They have a reserve that it is a cash, rich reserve. And number three, they are global. They're not limited within, the United States or a certain geographic area. So this is what makes this seven is different from the ones before.
So about 30% of the S&P 500 is now just these seven stocks. How big of a risk is that to the average investor?
It's really a high risk in this case. The reason for this, all what you need, just two of them to stumble. And, they have a bad earning or they have a bad, future look. And now we're going to have 30% of them, of the S&P 500 really suffering from this. The key thing here about it is the investors is looking at a very important point here, which is the AI. I mean, the AI is not just what the products the company is going to sell or the services. It's what they're doing inside the companies. For example, Brad, yesterday the CEO of Microsoft, he said that up to 30% of the code at Microsoft is done by AI. The same thing goes with Alphabet or Google. Specifically, about 25% of the code is written by AI, which means they don't need that many people, which is going to reduce the expenses inside the company, increase the sales of the services outside the company. This is the difference.
And so what makes these seven companies so hard to dislodge from their place at essentially the top of the kind of chain that's really driving so much of the market fervor right now?
Well, what they offer and their position in the market and the market share they have. You're talking about a company like Amazon and look at what their market share and what kind of services they offer. Look at NVIDIA itself. I mean, the king of the semiconductor, especially the AI chips. Every time you think we are getting to the end of it, they come up with a new chip. And you can run this one with Meta. Meta is trying to expand by having their AI services or having other services that they're offering to the consumers. They understand that the competition is really tough, and everybody looking at them as who going to be the next, out of that seven, and then will take their place. But they understand this. They spend, billions of dollars in R&D, billions of dollars in making sure they understand the market, and they're going to be first in the market with a product that's related to the artificial intelligence. As we see, this one is actually the future.
Data center capital expenditures are expected to reach $1 trillion by 2028, according to NVIDIA. Dedicated hardware is becoming a bigger threat to NVIDIA. In the race for artificial intelligence, AI, NVIDIA has been the stock to own. But like the rest of the market, it's sold off quite a bit in recent months. It is currently trading at levels last observed in the late summer of 2024, down about 25% to 30% from its peak. It's rare for a major winner like this to have a bargain price. But the price today only matters if NVIDIA is still moving in the correct direction in a few years. In 4 years, where will NVIDIA be? You might be surprised by the response. The company is powered by NVIDIA's graphics processing units, GPUs. GPUs were initially created to handle graphics for games, but they quickly discovered a wide range of other applications. They are helpful for any work requiring a lot of processing power, including training and operating an AI model, because of their special capacity to conduct several calculations in parallel. Although there are several companies that produce GPUs, NVIDIA is the industry leader. NVIDIA has a very outstanding data center GPU market share, with most estimates placing it at 90%. However, since NVIDIA is so profitable from its GPUs, it attracts other companies to the market with that level of market share dominance. Since the beginning of the AI competition, NVIDIA's profit margins have exploded, and some of its customers are growing impatient with the cost of NVIDIA GPUs. As a result, they are beginning to search for alternatives. Custom AI accelerators, like those made by Broadcom, are one area that many AI hyperscalers are interested in. These devices can perform better than NVIDIA GPUs in specific tasks, like developing and executing AI models, and are designed to handle a single kind of job. But because they are designed to handle a particular workload, they are not adaptable enough to run others. Since many of the AI hyperscalers already know how they want their AI workloads to operate, this probably isn't a huge concern. As a result, NVIDIA may experience some competition, but it probably won't be sufficient to overtake NVIDIA as a profitable investment. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Before the emergence of DeepSeek, most Chinese that I've spoken to were very pessimistic about their prospects in AI. And the major reason, or maybe the only reason, was that China would not have access to the advanced AI chips. And of course, at that time, or maybe before the emergence of DeepSeek, you would need the advanced chips to run your models, even for inference work. But then, DeepSeek made a major breakthrough in large language models, where you do not need high compute power. So all of a sudden, Chinese realize that now they can compete with the US in AI, at least in AI application. And as far as I know, the Chinese government has made a decision to go all out on AI application to strengthen their manufacturing sector even more. Not just the manufacturing sector, but probably the entire nation, including the society, government institutions, education, hospitals, and so on. So I expect in the next 3 to 5 years, China, the entire nation will be much more productive and efficient, which is not reflected in the market yet.
If we are patient capital, if we believe the long-term story, the constructive story with regard to China, then how should we express that? Do we express that through BYD? Is BYD the clear winner of these megatrends and this resilience?
I think then you have to look at the promising industries of China for the next 3, 5, 10 years, or even longer. To me, I think China's future lies in the tech sectors, no longer in real estate or the low-end or low-value-add manufacturing. And those are industries of the past. And therefore, paradoxically, in this environment, it's quite straightforward when it comes to picking, sectors and companies. To us, we think that the semiconductor industry, which is a laggard, i.e. there's still a gap between China's semiconductor technology with the US, Japan, Korea, Taiwan, and so on. But it's moving very fast in terms of catching up. So we like the entire food chain, from IC chip design to fabrication, tool makers, and even packaging companies. 2, I think, is AI. Very new. And it's the area where I think China will invest heavily to make the economy more efficient. Eventually, if your economy is most productive, regardless of how hostile one or two countries may be against you, you will be able to make a living, so to speak.
Knowing the direction of data center capital expenditures is crucial for NVIDIA investors. NVIDIA's earnings may suffer if this spending sharply declines. But according to NVIDIA's projections based on external data, data center capital expenditures would increase from approximately $400 billion in 2024 to $1 trillion by 2028. NVIDIA's data center business has brought in $115 billion in the last 12 months. If the $400 billion estimate for 2024 is accurate, it represents slightly under 30% of all data center spending. If NVIDIA maintains its whole market share and data center construction expenditures reach $1 trillion, it would make about $288 billion. That's incredible growth, but with custom AI accelerators becoming more and more competitive, NVIDIA might not be able to take it all. By 2027, according to Broadcom, the addressable market will be worth between $60 billion and $90 billion from only 3 significant clients. It's plausible to assume that Broadcom is aiming after NVIDIA's market share because that represents roughly 1/3 of NVIDIA's anticipated 2028 revenue if it takes all of it. Is NVIDIA going to fail in the coming years? No, in my opinion. GPUs and specialized AI accelerators will probably coexist in the future. Therefore, companies like NVIDIA and Broadcom will probably be profitable ventures. Will NVIDIA continue to grow like a rocket ship? Probably not. However, if you can buy shares on sale now, it will probably still expand by double digits, giving it a terrific option for a company that can outperform the market in the future. NVIDIA's stock, however, might find it difficult to increase if the data center industry falls short of that anticipated amount, because its total revenue might be limited and under pressure from growing competition. Wall Street analysts are still upbeat about NVIDIA. According to recent Alphabet and Microsoft earnings releases, NVIDIA is still on course for a successful year. Over the past 40 years, the technology industry has generated some of the most lucrative growth stocks, and artificial intelligence, AI, holds the potential to create even more possibilities for investors to develop wealth. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
This week we got more from the Mag 7. Most of the Mag 7, for the most part, have had the double beats. Now we have another week of earnings and a lot to watch for. What's on your mind?
Good morning, Nicole. You know, I think this is, you're right, coming off the gargantuan week that we had in terms of economic data and earnings. We don't have quite the same amount of data this week, but you know the headlines will still be there. We're waiting on news on tariffs. President Trump said they're getting closer, and we'll look for some announcements this coming week. We've got some economic data, but it's not top tier. You'll get PMI Composite today and ISM Services coming out in a short while here. We'll get that data. We have earnings coming out. Obviously, the other big news story of this week will be Wednesday's Fed meeting. Not expected to move on interest rates, but the press conference where Jerome Powell talks, I think, will be must-see TV and something everyone will want to watch to see how he sees the overall. Remember, unless I'm wrong, this might be the first time he spoke since he spoke at the Economic Club of Chicago and sent the Dow down 1,000 points with his comments. So I think that will be an interesting turn of events on Wednesday afternoon. Earnings, Palantir after the bell today is a big one. Tomorrow after the bell, AMD will be an interesting one. Uber and Disney on Wednesday. ARM Holdings on Wednesday after the bell. Shopify early on Thursday. Coinbase, not the highest top tier names, but good solid names. Disney will be an interesting one, but this will be after the big week we had, and like you mentioned, the 9-day rally and a soft opening here. Futures are already off their lows, so can we do another down opening rally during the day? Is that the trend now that traders should look at, Nicole? Watch for headlines. Scott Bessent is testifying this week. President Trump's meeting with Carney from Canada this week. You've got a Fed meeting. It's going to be a headline week, I think, this week, Nicole.
Yeah, as usual, right? We're getting very used to lots of headlines, and obviously, we've already heard that we're expecting some deals this week. I feel like there's been a little de-escalation with China, sort of putting it out there, like, let's make a deal. That has to be done with a kid glove.
Wall Street experts continue to recommend buying NVIDIA, a high-growth business, despite the current market sell-off sending shares of leading tech corporations down. Given their low share prices, these stocks may see substantial upside, according to the consensus price objective. Here are some reasons why Wall Street may be right about these leading tech stocks. This year's primary growth driver is anticipated to be demand for NVIDIA's Blackwell computing system, which is built for the most complex AI workloads. We've successfully ramped up the massive scale production of Blackwell AI supercomputers, achieving billions of dollars in sales in its first quarter, CEO Jensen Huang said in the fiscal Q4 earnings release. However, not all Wall Street analysts share this sentiment. Historically, the chip industry has been cyclical. Large data center operators continued huge investments in technology infrastructure, such as purchasing additional GPUs to power their servers, are crucial to NVIDIA's business. NVIDIA's stock has declined this year due to economic uncertainties and worries that data center operators may seek out more affordable methods to invest in AI technology. However, NVIDIA's GPU's computational capability cannot yet be replaced. Fortunately for NVIDIA, two of its biggest clients, Alphabet's Google and Microsoft, recently disclosed in their first quarter financial results that they intend to keep making significant investments in data center infrastructure this year. It's feasible that NVIDIA's stock might reach Wall Street's price objective in the upcoming year, with even greater long-term gains anticipated, given the ongoing investment in data centers. The company is currently trading at a fair 25 times this year's profits estimate, which may help the share's short-term growth. With a $168 price target, Mizuho Securities maintained its outperform rating on NVIDIA. The company's recent 8K filing disclosed additional export restrictions imposed by the U.S. government, which are anticipated to impact shipments of NVIDIA's H20 series products to China, including Hong Kong and other nations subject to U.S. arms embargoes. Despite this, the decision was made. A significant portion of the projected $16 billion in H20 orders, or roughly $5.5 billion in revenue, may be impacted by these new constraints, according to NVIDIA. Accordingly, it is possible that more than $10 billion worth of these goods might have been sent in 2025. NVIDIA's future prospects are bright, according to Mizuho analysts, despite these export restrictions. The delivery of the GB200 series and the company's expanded ability to test increasingly intricate GPU racks lend credence to this optimism. NVIDIA is ideally positioned to tackle massive markets such as the $1 trillion plus AI industry, the $500 billion enterprise AI sector, and the $50 trillion robotics market, according to Mizuho analysts. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Really just so thinking about this 433 level and what Jay Powell may say on Wednesday. I mean, I think it's going to be, the last time he spoke, he hit the markets pretty hard. But let's just start off with the big picture. The fact that last week the S&P gained 3%, almost 3%, and the NASDAQ up over 3%. It was a good week. Now what?
It was a good week, and now you want to be able to see a little bit of a continuation. Now, it's out of the norm that we do see 9 straight days of gains here, Nicole, so rightfully so. We might be seeing a little bit of a pullback in the market, but I would say if you're a bull in this market right now, if you want to just be able to hold the 55.75 level on the S&P 500 for this week, that's pretty much matching with the 50-day moving average, which we actually did overcome last week on Thursday of last week here. So seeing a little bit of a pullback, but hitting that 5,600 level or getting close to that 50-day moving average and bouncing higher, I think would be a win for the bulls this week. And if we are actually able to continue this movement to the upside for this week, I would look at the 5,700 level as your first area of resistance, then that 200-day moving average, which is sitting pretty much at 5,750. And then you could also look at this upper end of this channel here. Now, this would be actually a really big breakout. If we're able to break above 5,800 here today, you can make the case that, all-time highs could be in the cards here over the next couple of months, just given the amount of momentum, the market breadth expanding, as well as some of these tariff policies maybe being pulled back here. I'm not gonna say that we're all clear yet, though. There could be a risk of a pullback just because we haven't really made a new high compared to these pullbacks or these waves and pullbacks here. So once again, that wave or that achievement would be sitting at around 57.75 here. We do have MACD actually in a bullish formation here. 12 EMA is above the zero line, waiting for that 26 EMA to do the same here on the daily chart. And overall, once again, this is actually looking pretty good. If we're actually looking at the intraday levels, though, 56.30 is going to be a key area for us to be able to hold as an area of support. We're trading at around 11 points higher than that for right now here, but you would like to see the market kind of come down, maybe test that, get some buyers to step in and resume this uptrend. Any fundamental break of that 56.30, we have a pretty wide range to the downside that we could see. Now, obviously, these ranges are going to be based on options flows as well as where volatility is. So as we have higher volatility or heightened in volatility, which 24, 25 VIX is still elevated on a historical basis, the ranges that we kind of see on a day-by-day basis still widen out. So if we have any material break to the downside, looking at 55.40, which is once again a considerable amount away from here for right now, but that could be the area of support. And then once again, 5,700 as an area of resistance for today's session. So everything looks pretty decent. If you're looking at the last couple of weeks here, we just want to see continuation or even a consolidation, and then a break higher would be once again a win for the bulls in this market.
Yeah, understood. I know you're going to be taking a look more at S&P. I will say we often talk about market breadth. Every single sector is lower today. And, you know, down volume exceeding up volume, obviously, when you have all down arrows like this. It's not terrible, but every single sector lower. So tell me a little bit more here. I know you're looking at the futures.
Yeah, if you're looking at the E-mini S&P 500, the reason why I like to look at this is because you actually have the overnight price action, and then there's also a volume component. We can have something called an anchored volume weighted average price on these on the E-mini S&P futures here. And what was actually a huge win for us for the last couple of weeks here, if you're a bull, you were able to hold the October lows at anchored volume weighted average price, those October lows. We were able to hold that. That major white trend line that we've seen from the lows here has also held up. But we also broke above the volume weighted average price, the anchored volume weighted average price of the highs. And that was a key area that we were focusing on last week. Now, if we come back and retest it again, which is sitting at around 56.22 on the E-mini S&P futures, that's okay. You want to come back, retest, and then break higher here. What you do not want to do is see a failure below that level and coming back and testing the October 2023 moving average. Now, also for the bulls here, you have the CCI, and the CCI is basically measuring price action compared to the 14-day moving average here. And it's just trying to see kind of like an oscillator, right? We have a zero line that's sitting at that yellow line here. That's the first indicator on the bottom. And we're about to break through that zero line. And it looks like we want to break through that. If that does occur, Nicole, usually we see actually fairly strong follow through, you know, around a 4%, 5% move to the upside if you're comparing the last 3 years looking at that weekly chart. So that's bullish. And then the MACD is also hinging on the weekly. So we're setting up to actually have some pretty decent crosses here to the upside for the E-mini S&P futures. Price action just has to be able to confirm that for now. And for the bears, what I will kind of call out, you have the FOMC meeting this week. Did we hear some hawkish commentary coming from the Fed? That could be the case. We are not getting a dot plot this time around here, but the commentary will be key. And do we actually see some water being poured on the bulls here in this market to have a little bit of a pullback? So FOMC meeting, definitely going to be the vol event to keep on the radar for this week.